Good afternoon, everyone. Welcome to Hit the Bid here on September 1st. This is Ty Robbie here with your Week 35 Market Watch. Today we're going to be running through our charts and seeing what happened across the markets last week. Also going to be on the lookout for big news events and potential opportunities waiting for us as we head into Week 35. Let's jump right in here and get started with our October live cattle. Last week we did see steady gains across the cattle market, both feeders and fats picking up some nice ground and printing new all-time highs midweek. We do see here on this October live contract, we did see Monday, Tuesday, and Wednesday's action pushing higher all the way up into a new all-time high up there at 242.07 for this October contract. A little bit of rejection coming in here late Wednesday that carried over into Thursday's session as well. Seeing that first red day in about 2 weeks there on Thursday, closing below that prior day low. However, Friday the bulls were able to find support and thwart any potential pullback attempts, as we did see the buyers just step right back in and support this opening range. About a $6 sell-off off of that all-time high down here to Friday's low from 242 down to 236. That was about all the pullback that was needed here for the bulls to pick this market back up and reverse it here late into the week and have a nice strong close there on Friday, just shy of that 240 mark. As we head into the new week, we do see this market, like I said, canceling any attempts of a pullback here, and a nice strong close on Friday sets the bulls up nicely as we head into the new week. We do want to see the bulls get some bids above 240, and we should see that carry this market higher and continue this big picture uptrend up into the 240s and potentially targeting that 250 mark here, which is going to be the next key psychological level for this market to sniff out. So in the event of bids above 240 tomorrow, look for it to continue cutting back up there into new all-time highs. Relentless buying pressure, really strong demand here in this cattle market, showing its tremendous strength here at the moment. This market failing to pull back to the 20-day moving average. Even here, we are seeing support at some of these smaller, lower time frame moving averages and shorter term moving averages. So just a relentless demand stepping in here, failing to get more than 1 or 2 days, red days in a row over the last couple months here, as the bulls just are buying everything they can. Good strong demand, above average volume here on Friday, showing good buying activity as the bulls remain aggressive up here at near these record levels. Look for that buying activity continue next week and pushing up into the 240s. We do want to urge caution if we start to see some offers coming in below 236. In the event of offers below 236 and a close below there, we could see a pullback get underway, as we've had a pretty impressive rally over the last 2 months here, and this market would welcome a little bit of a pullback and cool off. We would expect to see any dips find support here near these major moving averages and continue this big picture uptrend. But at the moment, it's not looking like that's going to be a concern, as we should see Friday's momentum carry into the new week and look for the bulls to continue pushing this market higher above the 240 mark. We can go down the line here. All of these back contract months looking out into spring and summer 2026, continuing to show strong demand all the way down the line here. So good strong buying pressure all down the line. Really strong volume day there on Friday, showing the bulls are serious about keeping this market moving higher. Let's jump over to the feeder market now. Same story over here. We did see a nice 3-day rally here, Monday, Tuesday, Wednesday, on this October feeder contract, pushing all the way up into a new all-time high there at 369.37 for this October contract. Rejection coming in late Wednesday here as well, that carried over into Thursday's session and Friday's opening range, pulling back from that all-time high to Friday's low, losing about $10 there over the course of those 2 to 3 trading days here late last week. However, good support coming in here as we undercut that 360 mark. Bulls finding good support down there at the 359 area, pushing this market all the way back up and getting a nice strong close above 365 to finish the week on a high note. Record volume here for this October contract, trading nearly 13,000 lots on Friday, showing the buyers continuing to show strong demand and aggressive buying activity. We do expect to see this momentum carry into the new week. Tomorrow, if we do start to see bids rolling in above 365.20, expect to see this market shoot back up into the 370s and continue this big picture uptrend, keep it rolling. We are seeing support at some of these shorter term moving averages, failing to get any sort of pullback here, as the most we can do is about 1 or 2 red days in a row before the bulls jump right back in and push this market higher. Look for that trend to continue. We do expect to see, like I said, bids above 365 to carry this market higher back to new all-time highs in the week ahead. We do just want to show this bear pivot here at 359. In the event of offers below Friday's low and a close below this mark, we should see a pullback start to get underway, which would be healthy for this market, as we've had a pretty impressive rally over the last couple months here. A little bit of a cool off would be a healthy market action for this market to continue a nice sustainable uptrend. However, at the moment, we looks like this market's just going to keep on cruising and pushing up into new record highs. But just want to be cautious and keep an eye on that bear pivot as we head into the new week. As we in this cattle market, both feeders and fats, this pertains to both of them. As we are pushing up to these record prices, we do expect to see the volatility continue to increase. We could see some wide range days. We have seen some big sell-offs here briefly that do immediately get bought back up. But we do just want to be cautious, as up here at these levels, we could see some pretty wide daily ranges and increased volatility up here. But in the meantime, look for this market to keep on cruising. We can see all of these fall feeders continuing to show strong demand, above average buying or above average volume here on Friday, all down the line here in this feeder market, showing very aggressive buying activity and continued strong demand in this market. So we do expect to see all the way out into those spring 2026 contract months that these feeders and fats are just going to keep on cruising here at the moment. So very strong buying activity. This cattle market remains strong and healthy. Look for the upside to continue as we head into week 35. Jumping over to the December corn futures, we did have a pretty nice reversal here on Thursday and Friday session. We did see last week this market showing good rejection in all the right places. This market pulling back the prior couple of weeks up into some supply zones and seeing some resistance here at that declining 50-day moving average. We did see a little bit of a downside pressure to start the week before Thursday's session reversed this thing up and had a nice strong breakout here on Friday, breaking out above our prior month highs and a nice strong close above that 50-day moving average, signaling a potential trend reversal here in this corn market. With this nice strong close here on Friday, we are going to, at the moment, switch our bias to a more neutral bias here at the moment. We want to see how early this week, we want to see how this market reacts as we've gotten above the 50. If we do have a quick rejection back down below it, we would expect to see this market continue its downtrend if we get offers below 416 here and close below that 50-day moving average. But here at the moment, with how we closed on Friday, this could be signaling a new potential breakout. We still have this declining downtrend line here that has kept this market capped, dating all the way back to April of this year. So at the moment, we do want to see how this market responds once it gets to that trend line. But at the moment, looks like the bulls are starting to see some momentum favor their side of for the first time in a few months here. So in the event of bids above 420.5 here, we do expect to see this market pop up here towards the 430 area and start a potential new uptrend here, as this market looks like it could be reversing. That's what we want to keep an eye out. We'll be monitoring that closely this week. We want to see how this market acts as we are approaching this downtrend line. But as we break out, if we do see bids above 420 and break out above that downtrend line, we could see a new uptrend start to form from here and look for these corn prices to actually start gaining some value here into the harvest season. So we're just going to have to wait and see how this market starts early this week, and we'll continue to monitor that throughout the week. Oil markets also seeing a little bit of accumulation here over the last week or two. This market just hanging steady here, very little volatility, nice tight daily ranges here in this oil market, as it is pretty comfortable here, hanging around in the $60 range. We did see a little rejection early last week at that 50-day moving average, but this market then just kind of settled out here in about a $2 range all week long, putting up pressure here on the $65 mark. Bids above this 50-day moving average and the $65 mark could see a little bit of a pushback here up into the high 60s. However, any major breakouts or sustained upside isn't expected. We do expect to see bids above 65 just get this market stuck back into some range-bound range-bound territory, range-bound action here in the event of bids above 65. We aren't really expecting anything above $70 to trade. Look for this market to continue chopping sideways, very little volatility, and tight daily ranges to keep this market trading sideways. However, as long as if we do continue to see rejection by this 50-day moving average and offers coming in below 63.66, which was Friday's low, we would expect to see this market continue to push back down there towards the $60 mark. Very little directional bias here at the moment. We're going to maintain a neutral bias in this crude oil market going forward until this market can really see some sustained directional move. But at the moment, look for this choppy action to continue in this oil market, as it has been comfortable trading in this $60 price range. Over to our equity indexes now. We did have kind of a mixed bag last week. This market trying to pick up some upside, but the tech sector really kind of weighing on things late. We did have some NVIDIA earnings last week, which the market didn't react great to. That kind of was holding up that tech sector. The Dow continues to be the strongest of the bunch. We did see last week picking up some ground here on Monday and trying to rally back up towards these all-time highs, and prices just hanging out here near those all-time highs. The S&P also just hanging steady up here right around the 6,500 mark, but this NASDAQ index is the one that's weighing on things. This market trying to get a continuation and upside move here in this uptrend, but Friday's rejection was just not a really strong look here for these indexes. This market has had a very impressive run over the last couple months here, ever since those April lows. Really strong power trend over the last couple months here, and we could see this market just needing a little time to cool off. We've seen each of our indexes just ride this 20-day moving average over these couple months here, so really strong power trend here, but we are seeing a seasonally weak period here. A lot of our leaders are being extended, and some breakouts are failing to get some traction here, so a little bit of a pullback from this area wouldn't be a big surprise. We could see as much as an 8 to 10% correction in this market, and that would be healthy. That'd be a nice move for this market to pull back into some deep value areas and shake off some the loose leaves, but the weak hands and everything. But at the moment, we still have a very strong environment that's favorable to stocks, and we do expect to see this market continue higher into the end of the year. We may just need a little bit of shakeout here in the near term, as we are entering a little bit more volatile period and a seasonally weak period in this market. So be looking for some potential downside here, as we could see some weakness in the event of some offers below our prior week's low. We do expect to see buying activity resume at some point. We may need a little bit deeper pullback here and undercut some of these key moving averages to, like I said, shake out the loose hands and find some good deep value buying opportunities. But we do expect to see this big picture uptrend resume. Be looking for some dips to buy going forward, and at the moment, I'd be looking to get defensive if we start to see trade back below this 20-day moving average. Our pivot points here on the S&P remain the same for the third consecutive week. Bids above 6,500. This market will try and get continued momentum, but as we saw on Thursday, we got that close up there at new all-time highs, but Friday rejecting that, which wasn't really a very good look for this market at the moment. Kind of anticipating offers below 64.60 tomorrow to push this market back down lower towards that 50-day moving average and try and find some deeper value areas to buy. But in the meantime, look for this market to continue chopping up here in a really low volatility trend. We do have some news events to look forward to in the week ahead. Big picture news events are some non-farm employment data, jobless claims, and unemployment rate all coming in late in the week. Employment data sprinkled throughout Wednesday, Thursday, and Friday sessions before the opening bell. Also some manufacturing data here Tuesday morning. So those are just going to be some events to keep an eye on as we head into the new week, as those could cause some volatility in a seasonally weak period. Might be a good time to start tightening up the stops on some of this stuff, as we've had a pretty impressive rally here, and this market has been very giving over the last couple months, and we could just see a little bit of volatility here in the near term and a little bit of a shakeout, as this market would be good and healthy for this market to see a little bit deeper pullback, pick up some value area buyers, and resume this big picture uptrend here in a couple weeks as we head into the end of the year. But just want to be cautious here of offers below 64.60 as we head into the new week. That's all we got for today. It's going to be a short week here with the Labor Day holiday here today, with some abbreviated trading hours and some markets being closed today. Going to be a short 4-day trading week, but definitely got plenty of potential volatility, news events to trade around, and opportunities waiting for us in the week ahead. So we'll catch you guys tomorrow night for closing comments. Thanks for listening. Have a good night.